Welcome to Tech Talk Live. It's Tuesday, July 28th, 9 p.m. here in the DMV. I'm Sam Giacinto.
And 6 p.m. here in Los Angeles, I'm Jack Armstrong. Welcome.
And before we get started, Tech Talk Live is brought to you by AirPixels. AirPixels builds AI flight planning software that lets pilots pull off shots that used to take a full crew in 3 takes. On film sets, over rooftops, or anywhere a drone needs to fly smart. See what they're up to at airpixels.com.
And today we have a very special guest joining us. Thanks. We're joined by Tommy Cotter from Benzinga, a leader working at the intersection of financial data, APIs, and product strategy. Tommy has been closely involved with Benzinga's data and licensing products, helping businesses build with real-time financial news and data APIs. He brings a rare perspective that spans both engineering execution and go-to-market reality. Welcome to the podcast today, Tommy. Thanks for joining us.
Hey guys, thanks for having me. Excited to be here.
So to kick it off, would love to hear a little bit about how Benzinga and the data products that you guys are offering, how that has grown into what it is today.
Yeah, so for those that are unfamiliar with Benzinga, we've been around for about 15 years now, and we started out as kind of a small cap news blog. So we were just writing unique content about small caps, which at the time didn't get a ton of coverage. And so we were covering these companies. We started to license out the content to our first licensing partner. It was a very small deal, but that kind of garnered a bit of a reputation for us and got our foot in the door within the industry. And so we just started to we kept growing and started to kind of build out all of these data products, like corporate actions and all of these supplemental data products that were needed for a high quality news feed. And then the Benzinga editorial team would kind of layer their analysis on top of all of that data. And so we've grown and have really kind of taken the distribution is king approach and tried to broadly distribute our content within the ecosystem for retail investors.
I just want to butt in and say how unique that positioning is. Especially we've spoken about how previously agents simply crawling open source websites for documentation, can be up to 95% of their web traffic, and in turn that's hosting costs on the back end. So I think it's interesting to kind of lean into having a licensable API that you can not only can but encourage LLM and based applications to access, and maybe give a small piece of the pie for the cost it takes to host that content in the first place. But that's a unique approach. I want to highlight that because it's a problem all websites have. You can be like Zillow and just completely the war on scrapers, for better or worse, right? But it seems like kind of leaning into that may pay off.
Yeah, 10 years ago, when Main Street went to get their financial information, they would go to Google and type it in. And so just like even as little as 5 years ago, right? Like focusing on our SEO strategy and making sure that we're squeezing as much juice from Google as possible was a huge investment and part of our day-to-day operations, and now we still want SEO, although it's not as important as it used to be. Now it's geo, right? Generative engine optimization,
Yeah, yeah.
Which is a little bit of a kind of a sore subject, I guess, in the industry. We still need to get to a point where all of these frontier shops are responsibly licensing the content rather than just brute force ripping it off and
Fair
redistributing
use.
someone
What?
else's. Yeah, and so
You know?
yeah, it's more prevalent now than ever to make sure that content is can be accessed by these LLMs.
Interesting. So obviously a data API and is kind of, I believe, at the intersection of quality and speed. Is that correct? So with AI, you bring up a good point, like and crawling and AI models being able to reference like news or content from your website or stories. Do you feel like so? I mean, obviously the clients are paying for that speed and accuracy. Is that correct?
Yeah, speed and accuracy, and I would say unique analysis as well. Things can happen uh, in the financial markets, but if you don't have a real human or somebody with experience that kind of points to it and says this is important, um, I think there can be a lot of noise, and uh, I guess maybe these agents don't need all of that noise. They need clear, actionable content.
Yeah. Do you worry that like in the future, I know this might be kind of a strange like assumption, but I mean, it's never been easier for people to build their own AI agents and tools. And could someone just kind of spin up like their own, stock advisor, based on Benzinga's or like some news feed and just call it like, what's the value of Benzinga or that analysis?
Yeah. Well, we still do the analysis, and we are seeing those advisors all over the place. Uh, but I think we kind of go where the puck is going as well. And so, if people have a need for having some type of uh, agentic layer on top of Benzinga, then we'll support that as well. And we've got a broad reach of data sources and different data sets from all over the place that we use for our analysis. And so I guess access to data and unique content and information is a moat.
Gotcha. Yes.
Something going off of what Jack said, and I, kind of tangentially related and maybe more relevant than ever as the proportion of machines reading or consuming content, eclipses the human proportion of content consumption. A fascinating financial event was the flash crash in 2010, where algorithmic trading kind of cycled in over itself. In a layman way, basically the machines kept trading off of each other, and the market lost a very significant portion of its value very quickly. And it's always fascinated me as we kind of increase the both number and amount and of content and AI agents themselves producing financial journalism. Do you ever does that ever cross your mind? So it'll be a journalistic flash crash of like, if the AI agents all coalesce around a certain piece of advice. Obviously the retail trader doesn't have the capital to maybe impact the market, but collectively can provide some interesting. We all remember GameStop. That was fun. And who knows where that would have gone if they didn't pause trading on that fateful day. But that was a very interesting phenomenon of taking the marketplace and kind of pushing it to the limit. So do you see something similar happening with AI agents and cycling advice, or maybe playing it off of each other in that way?
I hope not, honestly. I think though, for just as many agents that would push the limit with a certain bit of context or information, you might have another set of agents that also try to verify facts or information. So you kind of have those two budding forces against one another. But yeah, in that same vein, with agentic internet browsing surpassing the human level browsing history, rather than one agent checking, or like a human would have checked 3 sources, an agent can check 50 of them or 500 of them. And so I guess that if the information is out there, I think agents definitely need to verify the work. That's my take on it.
Yeah. Well, and AI, will always be able to, at scale and speed, do it faster than a human. So theoretically, that the misinformation maybe wouldn't spread in that case, because the agents could spin up, the truth faster than, the that, what's a good way to say it, but yeah, the ill-gotten fake news, I guess, that's out there just to short sell or whatever it is, because that's always, like, I think, a concern from people, right? Because you've got, even before AI became a thing in the financial world, right, you always had these reports that were generated that honestly benefit the short sellers, right? They're trying to crash. Yeah, they're trying to put their research and to crash things or whatever to impact their
like
gains.
short seller reports, and trying to I guess
so
claim something.
Is it getting better now with AI and the fact that we can have more truth and more sources analyzed at the same time to prevent those types of reports in the past that were only to benefit short sellers?
Yeah, I think so. I mean, so much of trading and so much of investing is emotional. And so if you can take out that emotional component and you can replace it with truth that's grounded in data, and make a data driven decision the same way that an agent would, I just don't see things spiraling as much as they would if a human was just like, hey, GameStop to the moon, let's keep buying, like, which is what happened. So yeah.
Well, and to that, I guess it just reminds me of the idiom, perhaps, like, the markets can stay irrational longer than you can stay solvent. I think it's like the but yeah, I'm curious as to, do you think we'll ever reach a, is there truly going to be a rational market as long as humans are involved, or is it just going to turn into, I guess, supposedly if there was all agents all the time, there wouldn't be any, but even then they were trained off of human, they, like, the Great Depression is like training data, so it's sort of like they know about it, I guess, where it's just sort of like, and they probably will want to get a one up on the next guy. They may exhibit human behavior. I'm curious about that dynamic a bit further, but that's an interesting point. Like, a truly rational market is like, can it exist even with agents being the primary consumers and producers of data?
Yeah, like, at the end of the day, an agent's going to have an investment thesis. And so I suppose you could, like, you could kind of steer the agent with like a skill file or something along those lines, where you like provide it direction for its thesis. And I guess it could be like contrary to, it could take like a contrary position to what it normally, like what would be considered rational. Yeah, that's a good point. Something to think about.
Interesting. Yeah, I mean, I think people do seem to be trusting AI traders to trade for them more. I mean, I'm kind of there. I mean, I probably would rather. I would consider it, maybe versus like a human that, I mean, it's not even like from a fees perspective or something. I don't know if you're familiar with like Composer. I
Yeah.
think they were one of the first trading platforms to fully do agentic, whether it's crypto markets or whatever. And I mean, I think it's cool for a flat fee, you pick strategies and then it just kind of trades based on what you need. I guess from your perspective, working at Benzinga and with your experience building these data APIs, if everyone has the same data or like too many people are following the same strategies, just trusting AI to do their portfolio, there's not really an edge case and an advantage at that point, and everyone's looking for the advantage to quote unquote like beat the market or like to maximize their returns.
Yeah, I mean,
so like, is
like-
everyone following the same strategy based on, relying on AI to trade for them? Like that in the future, do you feel like that could be a problem from what you've seen, providing like you're providing the raw data? I know you're not providing the AI agentic trading side of things, but I mean, it does kind of feed into the market sentiment overall, right? Because you're still influencing what could be an AI trader or a human doing it.
Yeah, I just think like if you're kind of going where the average is going and like everything's commoditized, like I feel like there's always value in like perhaps like the counterintuitive approach. I mean, you want to go against the grain and you want to be right, and so those two things are kind of like it's really hard to decipher when that is going to happen, going against the grain and being right.
Mm-hmm. And that's the human analysis component, it feels like, because AI is not necessarily trained to make those decisions, because a human, but then also a human I could see being more emotional, even an analyst potentially. I don't know, it's hard. Just a lot of food for thought.
Yeah.
Well, and the reason I was smiling there for a second was because it's funny, but back maybe 4 months ago, I just asked Gemini, just screw it, I have a few grand, I want to throw it into the market, just give me some just pick some stocks for me. Some of them like CoStar Group lost probably around 70% of their value. It's like an activist investor takeover. So that one didn't pan out. Most of the other ones though. So
picked one really bad one.
Half your money on a pick, it's because I was like, hey, just give me something durable. It's like something durable, given the AI boom, I don't know, some utilities, real estate, I don't know. But it was very I laugh because it's like you're like, some people are out here having AI pick their portfolio, and I'm like, honestly, I don't have a lot to lose, so might as well give it a shot. Gemini, it's like 50-50, I'd say. It could have done me a lot worse though, but other than that dud, it's hasn't been too bad. But I think the whole market hasn't been bad, so I can't really we're kind of in a very interesting delusional period, in my opinion. But
another one that I like that you could speak to that happened recently, but I don't know, this was about in May when the situational awareness hedge fund, are you guys familiar with that fund?
No, let's see.
Situational awareness, I forget the guy who runs it,
LP,
but
Huh.
So they had a 13F drop where basically they just like announced all of their positions. All of retail get bought in, and then they have
That's
kind of
pretty hilarious how they kind of taper a little
gotten
bit.
out of all of those positions.
Oh man, I mean, good on them for, I guess, doing the whole dumb money thing. But that's all. That's pretty funny.
Yeah, like there was a bunch of press saying like, "Oh, this
This is a one-off
fund
stock
is
line.
like, yeah, up 400, 500%." And so all of retail buys in, and then they
And
kind
they
of
sell
come out of
out.
their positions. Yeah.
Yeah. Wow.
That is
That's-
actually pretty funny.
I guess that could happen. That could happen anytime. Yeah. So AI influencing financial data quality. There's obviously a lot of SEC filings that are very important, and I know to give retail traders more insight into these, long, lengthy reports. What are you guys doing in that space? Are you doing anything that's important to those filings and simplifying them for retail traders?
Yeah. So, I mean, the SEC corpus of filings is massive. I think I think don't hold me to this, but I'm pretty sure the entire corpus is like 16 to 20 terabytes in size. And so it's a massive database. Every year, 4 times a year, each company has a 10Q filing. Although it sounds like Trump might be trying to remove that 4 times a year reporting cadence. So I guess we'll see what happens there. But
Too much documentation.
yeah, yeah. And so I don't know. I find it helpful from a retail perspective. Like, we should have the awareness on what these companies are doing and how they're performing. I think that more transparency is better. But I suppose you could make the argument from the other stance that it's better for the company to focus on their mission. So yeah, we'll see what happens. But anyways, back to the filings. Yeah, our main mission is just making information consumable and digestible. And so when we see these SEC filings, we are leveraging LLMs to go through the filings and pull out the relevant facts and format them in a table that is digestible for investors. And this particular product is called Company Fundamentals because it's the main financials under a company. If you were to look at this data, you can get a clear understanding of how the company is fundamentally performing. And so that's what we're focused on, and that's kind of one way that we've leveraged AI to date.
Cool. So obviously there's tons of different industries, every company's different, and when you give one, when you allow AI to analyze one, company's filing, that's different than another industries. Like how does that work with displaying the data and also taking into account like the industry they're in or the stage of the company? I'm assuming is all of that like built into these models as well? Like,
yeah, I mean, some of like, just for this particular example, you kind of do need to take the decision tree approach where not every company is the same. You can't treat it as such. And based on the sector, perhaps you can treat the company a little bit differently in terms of how they report, and that can then in turn just make the data quality much better and accurate. Um, so, for example, like banks and insurance companies report their financials a little bit differently than a tech company would, for example. Um, and so, just bucketing them accordingly is one way that you can focus on the data quality and accuracy.
I see. So that's like grouping it together. Sorry, Sam. What were you gonna look? You were gonna say something.
No, I guess. I mean, I was just thinking too about the. I think the other question. I know we talked about fair use earlier, and this is. I've just been mulling over it. I mean, the liability question is a big one too. Like for content, and like, oh, my AI told me to drive off a cliff, and like who's responsible for that. For financial advice, I assume that it suffers from the same, and I know I'm almost kind of sick of hearing it, but every, quote unquote financial YouTuber or whatnot, it's like, oh, this isn't financial advice. And then they basically tell you whatever, whatever they want. So I assume the disclaimer is probably pretty similar with AI as far as the advice it provides, and then who even is liable for the content. Even if it's AI generated, if you ask the AI company, it's like, oh, well, it's, it's, they want to copyright the output, but then they don't want to accept liability for the output. So that's kind of their position, right? They want to, own the data, but then not own the liability. That's great. I mean, right. That's the best of both worlds. So I'm curious, any unique twists to this problem, being a financial, not a financial advisor, obviously, but I'm sure there's robust, even Section 230 may come into play where it's like, I don't, are AI agents just posters on a wider platform? It's a very interesting, at least from a policy perspective, to think about. But I'm wondering if there's any unique angles to that isn't covered by the standard, like, oh, this is AI generated, so we don't accept liability for it.
Yeah, I think like from a publisher standpoint, like we've got our standard boilerplate disclaimers, basically saying like, hey, we're this is not investment advice, and you can't treat it as such. And so I think for these agents, I think the biggest next step is kind of the trust but verify approach, where they need to trust the content, verify it, and all of this could be prevented, by the way. Like if the SEC had like an MCP server, essentially, like we could bypass all of that.
So if they had an MCP server, it would just be easier to control, essentially.
Yeah, I mean, if all of the data could be verified as direct from the SEC, I think that would just make things so much easier. But unfortunately, they haven't made their filings super easy to work with for the masses, and so a lot of companies have kind of carved out their space in the industry.
It sounds like they need to get on the MCP service, to verify. That's a little over my head in this space, but I do understand how it would benefit. I do understand how it would be beneficial.
Yeah.
So, it's fast. I think one thing that strikes me is just AI, like security wise too, like with financial, like when I hear like not robo investors, but just I feel like people are just being very trusting with AI to like we heard about models escaping, their testing environments. And now we're like, should we allow it to analyze our portfolio and trade for us before like yeah, what if it causes the next depression or something? Like
What could go wrong? Yeah.
yeah, are we really
So-
thinking about all the dangers of what could go wrong with being overly confident in this tech? Because yeah, no, I think there's a lot of benefits to AI models, ChatGPT, all whatever it is, but I think yeah, like if we become too trusting, could it be a security risk with in terms of financial markets?
Yeah, I'm me personally, I am only trusting my AI agent to kind of minimally interact with its surrounding environments. Like I trust pricing data. So like if a stock price is like below a certain threshold, then yeah, AI agent go buy it for me. That type of thing. Like you can set up different technical indicators too for your and for your agent to reference those technicals, since the underlying computation is just based on price. Um, but for other things where it's like earnings numbers, like I want those numbers direct from what's being reported to the SEC, not some other third party vendor. And so that's where I was saying, like, yeah, it would be great if the SEC just kind of exposed that information in the way that we need it exposed, rather than through like um, their standardized template format, which is it's tricky.
So is the fundamentals product that's being offered, like, is this, to kind of make up for some lack of a, centralized MCP server at the moment? Like, is that the value, one of the main points of doing that, so that you can have one source of accuracy based on the filings?
Yeah, exactly. And it's just like these filings are extremely noisy. The tags within them change all the time. Companies can change the way that they're tagging, and for the IR, maybe there's IR folks listening to this show, but teams are responsible for basically assigning these XBRL tags. That's the format that the SEC uses for the documents. And across I guess for the past 20 years, there's 40,000 XBRL tags for all public companies, US listed. And so it's like, how do you possibly begin to wrangle all those things? Because for example, like one of the XBRL tags might be like assets from sale of, I guess, CapEx invested equipment or something, right? And we just know that that's assets or revenue that you got from sale of assets. And so it's like those types of nuances are not standardized, and it's a bit tricky to kind of wrangle all of those things by hand, which is why many large competitors in this space have just had teams of hundreds of analysts do that. But now when we can leverage important and pretty beneficial for us.
I lost you for a second there. Sam, I don't know if you heard I
It
lost
was
you
a, it
after
was a
leverage.
brief
I,
flip.
I lost you after leverage. It broke up for a second there, but I think I understand. Yeah, you're saying leverage that so that analysts can interpret the tag. So the tags are basically to be less transparent, right? Because they could tag things at different but we need more transparency, and AI is helping sift through and simplify those tags quicker.
Yeah,
Is that correct?
100%.
Okay.
Yeah, like these tags, there's so many of them, and apologies for the internet.
No worries.
We're doing some work in the office, but yeah, there's hundreds, or there's tens of thousands of tags, and using AI to kind of simplify the tag into the standard, or like widely accepted fundamentals concept. That's what we do.
Gotcha. No, that makes total sense. Yeah, there needs to be one centralized. Yeah, well, wow, who knew there was that many ways to conceal information, it sounds like, or or make things a little harder to decipher.
Yeah, exactly. I think convolute might be a good word for it too.
Convolute. Yeah, good.
That's
Yeah.
very fair. Obfuscate. There you go.
Yeah.
Well, we got to keep analysts busy.
Yeah, 100%.
Well, it's kind of true, right? It's very much. I won't label it, but it kind of seems like a hazing ritual in some ways, right? You put in your time at the bottom to get, I guess to get your stuff at the top. I don't know. It's or whatever that is. But I guess there's still a very human component to how financial analysis itself is performed, in that I'm curious what this means for the analyst in a way. Where is it still 100 hours a week, except now you're expected to produce twice as much? I doubt the efficiency gains are going to trickle down, so to say. Trickle down labor. So that'll be kind of interesting to see. I'm not too plugged in, but I've read enough Wall Street Oasis to kind of get the gist of it, and am glad that I chose to be in tech, I guess.
Yeah, I think we're all glad. I don't understand why someone would want to be an analyst nowadays, but that's just me.
It doesn't seem like they're having a great time. I don't know. I'm very much maybe I don't need as much, but the 40 hours for a decent amount of money versus 100 hours for decent times 2 amount of money doesn't seem seem like it seems like a fallacy of bargain. But hey, to each their own.
Yeah, and if it's even decent times 2, I think a lot of people might be doing decent times 1.5, and so.
Well, Tommy, I have 2 closing questions for you. So obviously these data products at Benzinga are very impressive and 15 years in the making. Is there any advice you would give to founders or product teams building trusted AI products like in finance today?
Yeah, I would say my main advice is just iterate fast. The industry is moving so quickly, and just kind of finding out what people need, being able to spin it up quickly and implement their feedback is what I would recommend. And it's worked well for us, and that's kind of the way we work, is build fast and listen to our customers.
It's important to take the feedback. And yeah, and I guess kind of along those lines, like what is there something that people are missing? Like what do you think is like the one thing that is an opportunity that more people should be paying attention to? Is there something like quality? I don't know. Like, is there something that more people should be paying attention to given AI, finance, this whole intersection that we're at right now with all of this? Can you think of anything that's
I mean, I don't know if people are missing this per se, but I just think we're kind of like we need to start thinking about, and people are already thinking about this, but just like the energy consumption per token, and like companies are, and like cost per token as well, like companies are leveraging AI and tokens, and like at a certain point input equals output. And I know that some companies have like rules on you must use these many tokens per month, and so I think that's kind of an interesting concept, is just leveraging AI to make our products better, and having some type of awareness on how many employees are doing that.
So you're saying there could be wasteful spending in terms of encouraging more tokens that to get the same output that could have been more efficiently optimized?
Not necessarily. I just think like this concept of like tracking token usage and being mindful of tokens at an organization level is important.
Sure.
One, because you obviously want to make sure that people are leveraging AI, but two, people need to be leveraging it in a smart way, I guess.
It's true. It seems like you can equate it to like the infrastructure that powers the decision making. So like, just like we need when we order things online, gas prices might influence because it's a cost of getting the product that you ordered to your location. But I feel like to get those insights, if models get more and more expensive, is there going to be a significant return just because the model's more expensive? Like, we have more and more powerful models, but there also has to be a balance. But yeah, between what models you're using to get the insights, like, are you going to have enough of a return? Like, should you always be using the most expensive model for, how do you know when to use one model or the other, incorporate them all?
Yeah. It's like, do you need to use the strongest model to like,
Summarize.
I don't know, like add something to a document? Like, I don't know, probably not.
Yeah. No, yeah, that's something people. People are not having this conversation. What model is the most efficient to use? Like, because you don't want to be wasteful, because that spending can really add up at a organization level, like you're talking about. So it's a good point.
Yeah. I just think it's something that like just responsible token usage, and like making sure that people are leveraging AI at an organization level. Like, that's something that I feel like will become more prevalent, especially as people as these companies start to hire, or not hire, but like build these agents that are effectively doing what an employee would do. So.
Oh, true. What's funny, when it's put like that, we've had this conversation before, actually. With oh well, maybe it's not important if it's replacing. It's still saving money if you don't have to pay a person. That might be the wrong attitude, but yeah, it's a good perspective.
Yeah, I mean, it saves up front, right, for now, but
Yeah.
I think I will say we're very bad at judging the continuing costs. We're very reactive, and I think the markets prove that too.
Yeah. Well, eventually you got to go and, kind of clean out the closet. So it's important to do that, and after you initially make that reactive decision.
Well, sure. Well, Tommy, any final thoughts that we missed talking about today that you think is important that we should mention before we end today's episode? Anything?
No, nothing top of mind. Yeah, really appreciate you guys having me.
Well, we appreciate you coming on. Thanks so much for your time today.
Thanks, guys. Talk to you soon.
Yeah. Talk later.
Thank you.
Tech Talk Live is every week. Visit us on the web at techtalklive.xyz. Until next time, we'll be back soon.